Welcome everyone to the Moreno Valley Public Library's Adult Lab program. A few announcements before we begin. This presentation will be recorded for you to view later on our YouTube and Facebook pages. As a reminder, please keep your microphones muted and your video cameras off to minimize distractions to the presenter and to prevent background noise during the recording. If you have any questions for our presenter, put them in the chat box and we will get to them at the end. Now I'm happy to introduce our guest presenter from Altura Credit Union, Karena Zermeno. Thank you for being here, Karena.
Thank you for having me. And welcome everyone. Today we're going to talk about rebuilding a financial crisis. And why is this important, especially during times of COVID? It could be because maybe yourself has lost income in your household, or a spouse, or now you've maybe been taking care of a parent or relative that needs help during COVID. Know that this is not a COVID specific workshop, but this is a workshop to help anyone that has gone through a crisis, maybe not just COVID, but maybe dealing with negative credit or medical issues. We've all had some type of financial issue that we've gone through during our life, and we always think rebuilding is not something we want to do, because sometimes confronting the issues that we have and the challenges on our credit is not something we want to look forward to. But I'll tell you, after this workshop, you will feel motivated and empowered to get started on rebuilding after your crisis. So we'll get started here with our workshop. And I just want to make sure that we can see that screen there.
Yes, looks good.
Perfect. So rebuilding after a crisis. So a difficult money period isn't just extended heartache. It's actually works on our mental health, our financial health, and our physical health. We all know if financially we are not healthy, we don't perform well at work. We don't perform well at home as a mother or a parent or a spouse. And although we choose not to open those bills and the letters in the mail or answer the collector's phone calls, we know that we're not taking care of the financial issue, that challenge that we have. So it becomes a burden for us. The best advice I have is, if you can, or you are in a position to start tackling on these challenges, we're going to give you some great tools to start tackling those today and start putting money away for the next emergency and the crisis that we have. Because unfortunately, we don't have one in a lifetime. Life fills us with many challenges, financial challenges especially. Budgeting is the foundation for financial success. And I'll tell you, I've been in banking for 25 years. And in those 25 years, a little less than half, I wasn't budgeting, although I worked at a financial institution. So budgeting and building a budget is very, very important. Knowing how much money is coming in, what your current income, and at the end of the month, subtracting your expenses. Having a form or even an app, a budgeting app on your cell phone, is a great assistant. But I'll tell you, I am old school, so I do love to have a spreadsheet, and I complete it manually, and that's how I do things. But listing all your income and expenses and knowing how much you have money left for the end of the month. We get a lot of members that come in and they're consistently overdrawn on their account. We don't want that. We don't want our members to be negative every month and paying fees. And how do we help them? So by looking at their bank account, we always notice one of the big ones, the big expense I think we all have, is Starbucks, a lot of us at least. We see $5 a day, 5 days a week, 25, that's $100 a month that could have gone into a savings. Same members that say, oh, I can't save any money, I live off of my credit cards and live off of eating ramen at the end of the month until my next paycheck. We notice certain expenses that can be avoided, such as Starbucks. Another expense that we sign up and forget about is our cell phones. Cell phone is a huge expense. Call your cell phone carrier. Find out what you're paying for what you're paying. The data that you're paying for, is that overpaying on too much data? Could you lower your bill? Could you take advantage of a special or promotion they're having? Same thing with your cable, internet, home phone, if you still have one. Call your cable company, find out what programs and what specials do they have. Do you need to switch to another carrier? Are you paying for more than what you're utilizing? Remember, anytime that you purchase something, the person who is selling you that something, like our cell phone service or our internet service and cable service, the more they sell you, the more commission and money they make. So ensure that you're doing your due diligence and asking the right questions. And even if you have to sign up for a plan and find out 2 months later that it didn't fit your needs, then give them a call and adjust that. I know it takes about 30 minutes or so, but it's 30 minutes well spent. If you are spending more than what you make, you need to make some changes. And like I mentioned earlier, there's people that say, well, I can't afford to save and I can't afford to not use my credit cards because X, Y, and Z. Look, analyze your account, start budgeting, and you will see and find items that you can avoid buying that are not a need, but more of a desire. And you can start switching on utilizing your credit cards. Track your expenses on an ongoing basis. So make sure you know what's going in and what's going out. Now it's super simple. We have our bank accounts on our cell phones, so we can always take a look and see what has come out. Even if it's a 50 cents charge or a dollar charge, always be vigilant on those charges, even though you don't remember where that charge came from, because normally that is a sign of fraud, someone getting ready to take a bigger charge onto your account. So always keep an eye out on that. I know a lot of people that get their credit card statements don't review the items or itemize the items on your statement and just make the minimum payment and send it out. Make sure every financial bill or even your bank account, you are making sure you're looking over it on a monthly basis and you recognize all charges. Take inventory of debt. So make sure your information's up to date. And this is very, very important because I'll tell you, if you have a little bit of challenging credit that you created for yourself, but then someone else comes into your credit and starts using credit cards or using any information, it makes it even more challenging because now you have your own negative debt and someone else just committed fraud on your credit. And it's just sometimes too much to handle. So keep a close eye on it. If you have accounts, let's say you have a Macy's account and you have a Best Buy account and you don't use these only around Christmas time or whatever the case is, or haven't used them for a long time. Many people that we find that many people keep these accounts open because they think if they close them out, it's going to affect their credit in a negative way. Everyone's credit is like a fingerprint. So it may be something that affects you, might not affect me, or vice versa. Anytime that you have any credits that are open, any credit cards that are open, ensure that you're updating those accounts with your new address if you moved, with any updated phone number, any information that you have to update on those accounts. Why? Because not until you need your credit, you will find that now Macy's is under collection and you didn't use it. Someone committed fraud. They sent you the collection statements to your previous address. They attempted to call you and you didn't know until you were ready to buy a car this weekend because it broke down and you're discovering you have collection accounts. So ensure that you are keeping your information up to date, even if you use or don't use those accounts. If there is any negative accounts on your credit currently, make sure you create a plan of attack. How do we do this? If I, let's say, have a medical collection, I owe a medical collection for $1,000. How much money do I need to start saving? Can I make monthly payments? Can I contact the collection agency and negotiate down my debt? And the answer to all of those questions is yes. You can definitely, first and foremost, is negotiate down the negative debt. Know that any collection amount, there's going to be fees charged and added. There's also going to be interest. And the original balance that was owed is now a lot higher. You have the power to negotiate down these debts. Collection agencies don't get paid unless they receive any money from you. We'll talk a little more on that, but just create a plan of attack. How much money can I start making payments towards, or can I start saving money for these items? Accounts in good standing. If affordable, pay more than the minimum. I'll tell you, just on a $2,000 debt, if you made the minimum of $20 a month with a 19% interest rate, which is an average interest rate for credit cards and store credit cards and gas cards, then you're going to be paying, it's going to take you about 14 years to pay it off, and you're going to be paying about $2,800 in interest. So that is a lot more than what you even borrowed. And I bet in 14 years, you will not even recall the items that you used to purchase for $2,000. So ensure that you are looking to pay it off as soon as possible. If you can't pay it off completely the next month to avoid interest, make sure that every month you're giving more than the minimum balance. Look for ways to also lower rates. And people ask me, well, is it good for me to sign up for the zero interest for 6 months and move the accounts? You don't want to do that too much because it does affect your credit and can drive your credit down for because of all the inquiries and also all the new accounts. So part of what makes our credit score is 10% is going to be new credit, and 15% of what makes up our credit is inquiries. So make sure you're keeping those low and in a low number. You can also look ways to lower interest rates. Another great way is if you do have a credit card at 18, 19%, you can call and negotiate that interest rate down. The balance that you owe will stay the same. You don't want to negotiate that down because then it'll be settled for less than owed, but you can definitely negotiate on the interest rate. You can call the creditors yourself and ask if they can lower your interest rate that you cannot afford, the 18, 19, 20, 30%, and you need a lower interest rate. And because, especially in the days that we're living now, a lot of companies are more willing to do that right off the bat versus going through 10 different reps because they want to at least get paid back. It doesn't affect your credit in a negative way at all. If you negotiate down the interest rate, what they'll do is they'll just stop you from using that credit card, but they will lower that interest rate down. You can always apply for another one. There's no negative marks by negotiating down your interest rate. So delinquent accounts. Contact the creditors. Negotiate down the amounts. Negotiate payments if you like. Now, if you are negotiating the amount owed on a collection account, ensure that you first receive email confirmation or a letter by mail stating that they're willing to negotiate your debt down. Why is this a good idea? We've had members that have called, negotiated the balance owed on a collection account, and then the collection agency is stating that that was just a payment towards that $1,000 medical bill, not the $500 they negotiated. So make sure you obtain the negotiation dollar amount in writing beforehand. So enhance your credit by catching up on your payments. This is important. So we think, okay, I fell behind. I'm not going to continue to make payments. I'm already 30-day late, 60-day. I have 5 90-day lates. Every month, your credit either continues to go down or starts rebuilding. You have the power of doing that. How do you do that? It's by starting to have a good credit history. Does not matter if last year I had 6 90-day lates. Today's a new month, and I will start making payments and positive payments. I've negotiated down my debt. I've negotiated on collection accounts. I'm working into paying that off, and I'm also starting to rebuild on a positive note on my credit. Why do we need our credit? We all know we can't work in certain places, a lot of places now, because they rent our credit. We can't rent an apartment or a house or buy a house if our credit is not well. We can't even buy a car. And if we do buy a car and a lender allows us to finance a car with bad credit, know that your rate is going to be 19 to 30%. Super high interest rate. You're going to be paying a Mercedes payment on a Kia. And that is not a good thing. So you want to make sure that you start rebuilding that credit. Collection agencies will be willing to settle. Again, like I said, if they don't collect $1 from you, they don't get any money. Normally, collection agencies, if you have a collection for $1,000, you settle for $500. They're only going to keep $250 and send the other $250 to the original creditor. So if they collect nothing from you, they have these accounts that are working and they're not getting paid. Avoid debt settlement agencies. Why? Because a lot of times they're fraud. They tell you they can do and will help you with certain items, but in reality, they're not helping you. It's not reducing. And I'll say, for example, Altura Credit Union offers all our members a free service called Balance. And what Balance does is if you do have a collection account, high rate credit card, credit fraud, we pay this company to help you clean it up absolutely free. If you're with another credit union, I know many credit unions offer this program, it will be free. And then some credit card companies also offer this program for free. So avoid a debt settlement agency. I just spoke to one of our members yesterday and I was telling her about the program. She stated she wished she knew about this because right now she's making payments on her negative credit for $300 and about 180 of that $300 is going to pay off her collections. The other amount is going to the company. They're doing something that you could have done yourself, or you could have gone and obtained the service for free elsewhere. So please never, ever go to a debt settlement company that is charging you to do what you can do for free or other companies will offer you for free. It's helpful to have good credit, and we talked about this briefly, can improve over time, pay on time, pay debt down as soon as possible because then it avoids interest, avoid additional debt, and dispute errors. And I'll tell you, it is so easy to dispute anything that is negative on your credit. All you have to do is contact yourself, or you can use Balance through your credit union. Contact the creditor. Contact the credit agency. We have Experian, TransUnion, Equifax. And you can go onto these three websites, Experian, TransUnion, and Equifax. You see an item that does not belong to you, you can simply click on a button and say, this is not my account, give an explanation. They have 30 days to remove this from your credit, or at least send you an email or a letter stating that they are keeping this on your credit for XYZ reason. You can go from there. If you have positive payments, so I'll tell you with Experian, Equifax, and TransUnion, not all good debt or bad debt is reported to all three credit bureaus. When you have good standing credit, let's say you financed a car through Altura Credit Union, we only report it through Experian. We're contracted with Experian, so all of our accounts get reported through Experian. That means TransUnion and Equifax is not going to show that car payment you've been paying on time for 4 years. So what you would want to do is go on to your your TransUnion and Equifax credit agency reports and report that credit that you have with Altura Credit Union. You just add the name, account number, and a quick note saying that this is an account you have with Altura Credit Union and that you would like to add it to your other two credit bureaus. This is good to do because you're going to increase those credit scores that are not showing that positive payment. You don't know if you go to Bank of America or Wells Fargo or Chase or a car dealer and they run your credit, what credit agency they're going to use. So I don't know if you have seen it yourself or we see it when members come in and say, wait, I just went to Bank of America and my credit score there was 700. Why is here at Altura showing 600? And it's because positive credit that is reporting on TransUnion is not showing on Experian. So you have this power to not only dispute errors, but to also increase and add accounts to your credit report to help you boost your credit score. Another thing you can do as well if you're thinking of wanting to increase your scores is contact your Sprint or cell phone carrier, contact your Spectrum internet cable, ask them for a letter of reference, or your landlord, you've been at your home for 36 months and you've paid 36 months on time on your rent, ask them for a letter of credit. And what they do is you can take that letter of credit, upload it onto the credit bureaus, and show that you have a good standing credit history with your landlord, with Sprint, because Sprint does not report unless there's negative credit, but not the positive. So these are things you can do to help increase your score. But definitely dispute errors. Don't let that go by. There's always a legend out there. People think that, oh, collection accounts fall off in 7 years. True, but not true. 7 years from the date last reported, which means that the collection agencies continue to report and continue to report and will not stop reporting because they want to get paid. So if you have a collection account that starts, you're thinking ends the end of this year, guess what? They're going to re-report it. So now it starts over another 7 years. And if that collection agency goes out of business, they sell your account for money, and then they turn around and they re-report and re-report. So they never go away. So keep that in mind. So don't use a credit repair agency company either. So make sure that you're not using any company that promises you to help, debt relief or credit repair company that's promising to help in exchange for a fee on a monthly basis or upfront. Just avoid any company that is promising you to help. We've also seen it where people come in and say, well, the credit repair company gave me a copy of my credit and it says now that it's 750. When we take a look at that credit report, it's a what if scenario, and this member just paid $200 for it. So please keep in mind that not everything out there that is charging you is most likely not something you want to sign up for. Establish an emergency savings account. Allow you to pay bills when unexpected events occur, like COVID. 100% unexpected. We never thought that from one day to the next we would be shut down, restaurants would be shut down, people losing their monthly income, people who relied on tips. And this is why we want to start saving. I don't care if it's $1 a paycheck, if it's $5 a paycheck, if you can do $100 a paycheck. You start saving for moments of crisis, and we never know when that happens. We can be very successful and financially stable today. Tomorrow can be a different story. We suggest saving at least 3 to 6 months of essential living expenses. So add your rent or mortgage, your monthly bills, your expenses on your auto, and start saving and have at least 3 to 6 months of savings just in case of an emergency. And worst case scenario, if you don't need 3 to 6 months ever in your life because you never lost your income and you were one of the fortunate ones, then at least now you have more money to put into your retirement or use for travel or whatever you like to do. But savings is a great idea. And if you can start today, even like I mentioned, if it's $1, it starts creating that pattern. I also suggest when you start saving, make it automatic. So out of sight, out of mind, and that's 100% true when it comes to finances. If we don't see the money from our paycheck going into our checking account, then we don't remember. We know we have the savings account, and we know that, Altura is pulling out $20 a paycheck and putting it into a savings account, but it's not visual to us. I'll tell you, when I started working with my first financial institution, I just direct deposited my paycheck all into the checking account. I would call, and back in the days you had to call, we didn't have an app, but I would call and ask, okay, well, how much is my balance? $78.36. Okay, great. I'm at the mall, so that means I have about $70 to spend. And I would empty my account every paycheck. I literally would always think, I have no money to save. I cannot save. I am living paycheck to paycheck. Not until I started separating my money and keeping it separate, having the automatic withdrawal from my paycheck. So I would see my paycheck and it was a certain amount, but I knew I got used to that amount in my checking account, and I knew I had a savings saved. Before I knew it, I had an emergency and I looked at my savings and I thought, don't need a credit card. I can use my savings money. So please make it automatic. Also make sure that your financial institution, is not charging you to have a savings account, that you don't have to have a minimum balance. And if you don't have to do anything special, and they're not going to charge you, because there's no point in trying to save and earn interest if they're going to charge you $5, $10, or $15 a month. Explore, I'm not saying Altura Credit Union, but I know that with us, we offer you up to 19 savings accounts. There's no minimum balance, no monthly service fees, and you can name them what you want. And why is that important? Well, if you want to try this out with your kids, I do it with mine. They have piggy banks and they have 3 different ones. I have them save for when they used to go to school, a piggy bank with a picture of Kona ice. That money they knew visually by looking at it, that was money for Kona ice. I can't touch it for anything else. Then they had another piggy bank, maybe a game for their gaming system or shoes or whatever they were saving for. That picture went on that piggy bank. And then another piggy bank with saving for a car or saving for something larger. So smaller, maybe once a week they touch that money, something medium savings, maybe a few months that they're saving for, and then a long-term savings. And adults, we need this plan as well. Why? Because if I have all my money in a checking account, I'm gonna spend it all. It's just our human nature. We see it, we have it, it's gone. With a savings account, the same thing. If we're just saving one piggy bank, one savings account, and putting all our money in there while a big emergency comes up and we just wipe out the account, right? Or we're going on a trip and we wipe that account out. Well, start separating your money. Maybe your savings account would look like emergency fund. I'm saving for an emergency fund. $10 goes into that savings plan. I'm saving for a new car. I'm going to put a little more into that account because I want to be realistic and start saving a little more. I want to take a trip, or I need to buy new tools for my garage, or I want new shoes every month or so. So that money is going to go in there. So these are the ways you can start saving, and visually you can name them what you want, save specifically for that item, and it's easier not to pull money out. Okay. Save for retirement continuously, because if you're anything like me, you were 18 one day and then you woke up and now you're in your 40s and it happened that quick. And all the adults that watch this, you know that it's true. Start saving for retirement. We don't want to work until we either pass on or have to go to a home because we're ill. We want to make sure to enjoy our later years in life by doing things that we want to do, whatever that is and that looks like. We don't want to have to work till we're 75 or 80 years old. Loans cost you, so make sure you're the bank. So anytime you borrow from a credit union, bank, financial institution, they're the bank, they're making money off of you. They're the ones earning interest. When we turn it around and we start saving our money and our money is in the bank and we're earning interest, we're becoming the bank and we're letting the bank borrow our money. And that's how we get paid. Continue to contribute to your retirement fund, even if you're paying back loans. And if your employer is matching a certain percentage of the money you're putting in there, take advantage of that, because that's just going to make your retirement grow. Now, I know that not everyone can start doing this right away, but depends on what financial situation you are in. So if you're currently in a situation where you have negative debt, you have bills, it's overwhelming, don't worry about your retirement at this moment. Don't worry about saving 3 different piggy banks and putting money away for everything that you need in life. Tackle on the major issues, which is your credit. Start working on your credit first. Once that is done and you are on a path of recovery, make sure that if you got yourself in trouble with some credit cards, make sure that you're not taking out too much. Make sure you're negotiating down interest rates, that you're being smart about the way you reutilize your credit. Once you have that tackled down, start looking at the options of a savings account, money for rainy days. That should be your first priority. Start looking into saving in case I get into trouble again. Where can I go to versus a bank or a credit union for a loan? Let me try to take care of it myself. Of course, if you need that help and assistance, we're here to help you and take advantage of it. But if you don't have to, then we prefer you not to. And then once you've gone into the savings for rainy days, you're getting your credit back on track, look at your retirement options and plans and find out what your company is willing to put in for you and how you can make that grow as quickly as possible. So I did talk about a free service that Altura has, and that's our balance program. Again, this free service, if you are already a member of Altura Credit Union and didn't know about this, this is available to you. Or if you're not a member and are thinking of becoming a member, this service will be free for you to utilize. Balance is a third-party company that Altura pays for you to utilize with financial education, counseling, credit, you have money management counseling needs, or debt repayment options. Debt repayment options is my favorite option that Balance offers. And what they do is if you do have a collection account, high rate credit card, credit fraud, they call in and do the negotiating for you. They take the headache on to deal with the collection agencies or any other creditor that you owe money and negotiate down. They also consolidate the credit, the negative credit, into one payment, and there is no cost for that. They also help you with credit report review. So there's a lot of tricks about credit and how it works. And like I mentioned earlier today, our credit is like a fingerprint. There are certain things that I can go do that will affect me more so than if you do it. So for example, if I go and apply for a Kohl's credit card today, there could be points taken off of my credit and drop my score, but then there might be you that go and apply for the same creditor at Kohl's and nothing happens to your credit. Why? Because the credit agencies are looking at how you've treated your credit. The biggest impact on our credit is 35% is how we repay our loans and how we take care of our credit. So if we're repaying on time, 30% weighting of what factors into our score is our repayment. 35%. 30% is our revolving balances. So keep that in mind. And this is something that I learned through Altura and going through the training. But if you, let's say you have one credit card for $1,000 available credit for usage, and every month you're running it at 80, 90%, so $800, $900, even 100%, $1,000 every month, your score is going to significantly drop. Why? Because the credit bureaus see, wow, they're using too much credit of their available revolving balance. So we're going to drop their score so they're not utilizing other credit cards this way, or no one else gives them more credit. So keep in mind that's 30% of the weighting on your score. And then you have your credit history and how long you've had the oldest trade line. So if you do have say Macy's was my first creditor back when it was the Broadway, I kept that the longest because it's my oldest trade line showing on my credit report. And I want to keep that oldest trade line, but I make sure that I'm always ensuring if I move, I'm updating my address, that I'm checking my credit. And it's free to check your credit, absolutely free. Like I mentioned earlier, through Experian, Equifax, or TransUnion, you have the ability to do that. Check on it, get alerts. A lot of people ask us, is it good to have Credit Karma or Credit Sesame? Yes, there is no cost. You don't have to pay. They'll try to sell you on your credit report. You don't have to pay for that. All you're getting for free is your score. If there's any changes, if someone applied for credit using your name or you did, you'll get an alert on your cell phone or email. If your score dropped, they'll send you a message stating your score dropped and these are the reasons why it dropped. So it's great to utilize them for those things. Once you want your credit report, you don't pay it through there. You just go on Experian, Equifax, or TransUnion, absolutely free, and you can utilize that service for free to check your actual credit report, make any disputes online, or even add positive accounts that you have with the other credit agencies. So again, if you are a member, you can utilize this service to help you with your credit. And lastly, I'm going to give you my contact information. If you have any questions about getting financially healthy and fit, we want to help you. We can sit down with you or even do Zoom nowadays and go over what's on your credit, what you should do to increase your score, or if we can help you refinance a certain auto loan or mortgage to help you lower your payments, we can do that as well. If you're doing better somewhere else with an interest rate that's lower, then we will tell you you should leave it there, you're doing well. Or if you want to open a savings account or a checking account, anything We completely offer a free checking account, no minimum balance, no monthly service fees. You don't have to have direct deposit. You don't have to use your debit card. It's just a completely free account. And we do this because we know a lot of financial institutions want you to use your debit card and want you to have direct deposit for the reason, their own personal vested reason. But what happens when we're not working and we don't have direct deposit coming in through the account, or where you're not using your debit card because there is no money in the account? They start charging you. And we thought, there's no way we can charge our members when they're in a time of need. So please, any questions, feel free to call me. I'm adding my work cell phone number to this presentation, which is 951-757-5920, or my email address, kzermeno@alturacu.com. If not, you can visit us at any local branch, and any one of our member representatives would be more than happy to assist you. Thank you and have a wonderful day.
Thank you, Karina, for your time. It was a very interesting presentation and very informative. Thank you.
Thank you so much.